We're doing it across hundreds of millions of photos across the US every day, and getting to that condition, quality, and so we detect the room type, the condition, quality, and about 30 different amenities and attributes.
Estate Hustlers podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Properties. Today we are joined with Marc Rutzen. Marc comes with 12 years of real estate experience and tech. He's founder of Enodo. I know you're going to have to correct that for me, Marc. Sold it to Walker and Dunlop, and then launched HelloData in 2023. He holds a master's from Columbia University and is a licensed broker in Illinois. Marc enjoys reading, running, and family time. Marc, we truly appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, thanks for having me. I kind of started as a real estate guy, actually. I was in real estate development and brokerage for the first 5 years of my career. And, I was doing the manual process that I know a lot of investors and operators go through today. When I was trying to prove out market rents, especially for a new development, I was going to property websites, listing sites, Rentometer, and cobbling together data, and then trying to figure out, man, can I stand behind these rents? And at the end of the day, it's many hours of work, and you don't feel very confident in the rents at the end of the day because there's no way to get a true apples to apples comparison in real estate. So I ended up launching Enodo because I knew that, man, tech had advanced so far, but real estate seemed like it had not. And, I built Enodo to automate a lot of that process that I was doing manually. And our big claim to fame with that platform was, you could toggle in the platform granite countertops, hardwood floors, roof deck, and you could instantly see how much more rent you'd be able to get if you did those things.
Wow.
And that ended up performing pretty well. Like 10 months after we started selling it, we got the offer from Walker Dunlop to buy the company at a pretty good price. And so for us, I'm like, man, I was 30 at the time. I had my first exit. Like, this is phenomenal. Rose up the ranks at Walker and Dunlop to chief product officer, scaled my team of 10 to about 40. I oversaw data science, product, and customer success. And then from there, after 4 years of doing it, we hit the goals that we had set out to, post acquisition. And I was sitting there having all these companies pitch me their data, right? Being on the other side of the fence was interesting because startups were trying to sell me their data feeds. And I'm like, this is not all that good. This is still a big problem. It's still hard to get real-time, accurate multifamily data to price rents. And so last year decided to launch HelloData with Tim and Nico, who are now my co-founders, but were my first two hires at my last startup.
Wow, that's incredible. That's very cool. So did Walker and Dunlop, did they shelf your product, or are they currently using it? Because is it even accessible to us?
They're still using it. The issue is they did take it internally, right? So It's just their producers and underwriters using it, and they've processed, like last year I was there, about 40,000 documents through the system because we could parse rent rolls and operating statements. And so people love that, and it clearly works very well. It was like the equivalent of Red IQ for uploading your rent rolls. It's just only available to Walker as far as I know right now. So we're like, man, let's build our own market rent solution because it's still a huge problem out there.
Well, and I ask if they shelf it because there's companies that'll buy tech, like next up and coming tech, and they will make it to where you just can't get a hold of it, you can't use it because they just don't want it available because now it's cutting edge, and that becomes the unfair advantage. And it sounds like, ironically, I've got a refinance happening with Walker and Dunlop right now too. So they might have used it. Who knows? But
I'm sure they use it to spread the rent rules and operating statements for sure.
That's incredible. So let's talk about HelloData, because you're spot on, and you're spot on because you've been in the weeds as a real estate investor and fumbling through all of the T12s, T3s, rent rolls. So tell us about HelloData and how it helps us propel forward and not get stuck in trying to find the data everywhere.
Yeah. So what we do, so we go every day, we go to about 57,000 property websites nationwide and several different listing sites. and we capture the data on every unit that enters the market, how the price adjusts over time, and where it finally leaves the market, right? When those listings are taken down, it's because they're leased, the vast majority of the time. So we find that if you track that last rent when that unit is taken down, 90+% of the time, that is exactly what ends up on the rent roll, right? So we're getting, by tracking about 25 million units across 2.3 million multifamily properties nationwide every single day, we're capturing the last price of all those units, which is essentially recreating their rent roll from real-time public data. That, coupled with our computer vision algorithms to help identify the most relevant rent comps from a resident's perspective. So we assess the condition, quality, and attributes from the listing photos in real time and use that to help source better comps. And the specials extraction, where we actually follow the whole history of all the specials posted to the property website. And the special that was active at the time when the unit was delisted, we apply that to get effective rent. We use AI to get the dollar value of that special, apply it to the last price of each unit, and get its effective rent on the day it left the market. That gets us a data set that is 25 million units across the US, is a massive data set. And because we're updating every day and doing it in the way we are, we get really, really accurate data. And that drives both our automated rent surveys that you see in the interface, and then our pricing recommendations, which are basically taking, like an appraiser would. If you think about an appraiser, they look at recent closings of similar properties. We're looking at recent closings of similar units to help you price each unit in your property.
Yeah, that's huge, and you're not needing to go into Rent-O-Meter and hoping to comp up against something of like kind, because one unit is not the same as another unit on another property. Like
Right.
you had said, I mean, we on our renovations, we put granite in every unit. We put LVP flooring, the black white color scheme with hinges and hardware, compared to, say, something at close to original vintage that has the laminate countertops, the
Mhm.
older fixtures. I mean, we're able to achieve higher rents because we're putting more money into it. Now, on the flip
Right.
side, if somebody's buying that older property with no value add, they can now see what we're doing, and then they can comp up against what we've achieved in the market, and
Yep.
find out if there's a delta there strong enough to even invest in a property. Is that right?
That's exactly right. So we've got with the computer vision model. I, in my job at KIG, when I was doing the brokerage, I was a data analytics officer. So I was looking at like market rents and trends and helping underwrite deals. We had someone on the team who would look at the images from all the property websites when they're doing a comp analysis, and they would rate the finishes to say like, oh, this one's better, like the fitness center's better in this one, the pool's better in this one, the finishes and the interiors, like the kitchens, are way better here, but these guys have better dining rooms, like that sort of thing. And I'm like, at the time when we did this with Enodo, like 2016, 17, there was not a really good way to do that at scale, right? Like we looked at the amenities in the text of the amenities, and we could pick out, which amenities were present based on the listing descriptions, but we couldn't do anything with the photos. Today, AI has advanced quite a bit, as I'm sure everyone has seen,
Yeah.
and now we can do it with the photos at scale. So we basically replicate that person's analysis, but without a human being having to lay eyes on it. We're doing it across hundreds of millions of photos across the US every day, and getting to that condition, quality, and so we detect the room type, the condition, quality, and about 30 different amenities and attributes. We use that to get similar properties.
That's 2016 we had algorithms, of course, but now you've got AI, and AI to a mass degree, and that is, let me get this right, that's enabling you all to pick up all of the pictures across every listing, and then AI is basically scanning those pictures and finding out the quality of the unit based on the fixtures, amenities, and the furnishings and the color scheme. Is that right?
That's right. That's right. And
That's so wild. And then if you can pick up on a property that might be, um, call it 10 years old because it's not brand new, there's an opportunity there, because now that
for
older
sure.
property can do some updates, and now they can comp up against the newer property and potentially push rents harder.
Yeah, I mean, interesting story. So I did this demo a few months back where I put in this property. I usually, when I do the demos, I put in a deal that someone is working on because then they can see, oh, the data matches up perfectly. That's good. And then they're like, if you have that for my deal, you have it for all the deals. That's how usually the process works in the demos. So I run this guy's deal. It's a 1940s property, right? And the first thing that comes up when I press our suggest comps button is 2010 and 2011 properties. I'm like, oh my God, demo effect, something went wrong. We didn't get the right results here. And I'm getting ready to like message the engineering team and say something broke, help. But the guy looks at it, he nods. And I'm like, oh, sorry about this. Look, something must have bugged out. He's like, no, that's perfectly accurate. We sourced 2010 and 11 comps for a 1940s building. I'm like, how could that be accurate? He's like, we just got rehabbed this over the last 2 years down to the studs, rebuilt the entire interior, and it actually is comparable to those. Those are our top two comps. And then we go look at the property websites, and sure enough, I could not tell that I'm in a 1940s build. It looks exactly like the 2010 and 11 construction. And I'm like, that is the value of the algorithm because it's analyzing the look and feel
Yeah.
that a resident is going to look at when they're deciding where to live.
That's huge, and that's kind of goes with what we do. We focus. You can't pull up to 1960 and then sell 2024. So you kind of have to start with the exterior in combination with the interior because ultimately people want to feel good about pulling up where they're living at too. And
Yeah.
there's a lot of operators that will only solely focus on the interior. They don't want to do any kind of updated painting, and painting brick is a huge a massive decision to make because you take something that's essentially there's no maintenance to now there is going to be maintenance 10 years
Yeah.
down the road or potentially even sooner when you paint. So you've got to keep it updated. But if that pulls it out of 1960, then that to me is something that has to get done. And your all's pictures are proving, or your algorithms are proving that as you're not even able to tell the difference between 1940 and 2010 or so on because of the pictures. That's huge.
Mm.
Um, what about? I think that you all are also getting into the financials, the income, the expenses, and able to comp. Can you go touch on that too?
Yeah. So after we, source the rents and then look at where things are closing among your comp set to help kind of inform the top line and where you should set your pricing, we actually have expense benchmarks trained on. It's publicly available data. It's from Fannie, Freddie, HUD, and capital markets or like CMBS loans. But we basically cobbled together this data set across the U.S. about 25,000 properties with real financials, all stabilized assets in every different market, and we trained a machine learning model on it to predict each line item based on how similar properties are functioning in your market, like what their operations look like. So I always tell people we're not trying to predict your actual NOI. We're trying to predict where you should be able to operate based on similar properties, controlling for differences like their amenities, their specific location in the submarket. The model handles that really well, and we end up landing within 10% of where their actual operations are across the board, across like the entire U.S. So you get to an NOI that's pretty darn accurate with no effort. You're just putting in an address, and then we source your comps, tell you where rent should be, and tell you where expenses should be in a few seconds, and that's a huge time saver.
Yeah.
We're not saying that you should say, well, that's what they said the NOI is with 5 seconds of analysis.
Yeah.
I'm just going to make an offer today. We're saying, hey, here's a starting point for you, and if you want to set your rents more accurately and see like where the upside potential is, you can do that very well. And if you want to get a sense of operations, even though everyone operates differently, you get a good sense of where you can perform in this market and do it in a tiny fraction of the time it would typically take.
Yeah, and that is huge. And then you can put the numbers in there that you feel like you could push rents to if you do certain changes to the property as well. Is that right?
Yeah, there's a value add comp function, which we've gotten a lot of positive feedback on. It's just a toggle. You're like, do I want comps or value add comps? You
Yeah.
toggle that on. It's going to serve the next level up in terms of condition, quality, and amenities as your kind of aspirational comps that you can push rents to.
Yeah, that's massive and a huge time saver, because really everything that you put in an Excel sheet it's an educated guess, but a lot of times, I mean, even if you compress the cap rate a 0.5%, your valuations could skyrocket depending on the size of the property. But this can get it pretty darn close, pretty accurate, and then you can either pass, dig deeper, or move forward.
Yeah, for the deal teams, I mean, it's amazing for screening deals. You're like, hey, just throw it in. Oh, that looks good. That doesn't look good. Okay, the broker's got some BS going on here in the OM. It's definitely not going to look like that in real life. You can do that sort of exercise very quickly. And then for the asset and property managers, they have to set rents every single week. They typically have a pricing call like Monday or Tuesday each week. And so for this, it's serving up everything that changed among your comp set. What entered the market, left the market, what were the prices, what were the concessions, and it packages it all nicely. So they can say, if the owner flipping it, say you're on the property manager's side and you're the owner, like, hey, how come we can't get the rents that this guy over here is getting? It looks like they're very similar. Well, you can point to it and say, actually, they're not getting those rents. They're asking here, but they're really closing here, and they have a concession bringing it way down. So you're actually above them in terms of the rents you're really getting, but it doesn't appear that way if you're to just go to their property website.
Well, and that can kind of peel another layer down too, because property management companies don't all perform at the same caliber.
Yep.
So one could be just totally failing while the other ones are performing, and those excuses go away with this. So it's like, no, literally, this property is doing 2 times better than this property, and most likely you're the reason why. That's huge to have. Lift the veil a little bit. Let us know what you all are working on and what the future looks like.
So the big one right now, we have built this pricing recommendation system where you have all your actively listed units, and we source floor plan comps where it's a floor plan and a competing property that's very, very similar statistically to the one that you're trying to price. And we make those floor plans flow in. So we show you 25 examples of recent transactions, stuff that has been removed from the market, capturing that final effective rent, including concessions, to get you, and then we just basically average those, right? So we're saying, look at these 25 things that have closed recently that are very similar. Here's where they closed. Based on this, you should price here. Okay, but from there's more nuance to it, right? We're not yet identifying things like, hey, based on the number of units you have about to hit the market of that floor plan, you should cut your price because you're going to have a tough time maintaining occupancy if you don't cut your price. We don't have their rent roll like flowing into the system yet. So what we're basically working on now is a price versus time on market relationship, where we can say, hey, input that how many of this lease type you have, or how many of this unit type you have. Oh, 10? Okay, you're going to have to cut the price because it's going to take you 90 days to lease all those. Unless you cut the price, then it'll take 30. Right, so we're working on that. And then the variable lease terms, because we're sitting on all these property websites every day, we basically see all the different lease options they offer. And a lot of times it's like 9 months is at this price and 10 months is at this other price. And then they have all these different options. We're capturing those now. So we're going to start recommending not just the price for a 12-month lease, but here's the price you should offer for a 9-month. Here's a 14-month. And if you want to smooth your own demand, here's where you should be. Here are the terms that you should offer the best pricing on because you really want to smooth those expirations for next year. Those are the big things on the revenue management front. And then on the deal sourcing front, the coolest thing we're working on right now. So we have this feature where you can select other properties that have been successful for you, like other developments, other stabilized assets. And based on the attributes of their market, like looking at the demographics, the economics of the market, competing properties in the market, we can tell you where in the US there are other markets that would support that type of development or investment. that are not flooded with other competitors at this point. Right, so that one, as a previous developer, I'm like, man, I wish I had that back in the day. That's incredible, and we're pretty close to pushing it over the finish line here.
Yeah, that's the biggest thing. 'Cause once the herd shows up, the market's ruined. I mean, just turn left and go down another road because it just gets to a point where it just doesn't make sense. You're buying on a future value. Your sweat equity is gone at the sale, and you can't ever achieve it. And your cash flow, your coupon clipping at that point. And if you want a coupon clip, I mean, put your cash in a money market account. Don't put it in real estate because you've got all these headaches with real estate. But no, that's huge, man. I'm excited to see what because this is just the beginning. I mean, you're still. I mean, you're just planting the roots right now, but you are compounding off of your previous experience too. Now it's just now you're supercharging what you already had. One quick question: can you put in on a value add? Can you put in different amenities like granite, this and that, and it'll push like different rent?
No, not at this point.
Okay.
What we basically found is like, so the premise of Enodo was really cool because you can toggle amenities and see like, oh, now rent's going to go up or down. But the reality is no resident comes in there and says, oh, stainless steel microwave, I'm going to pay $10 more a month for that. That's an amazing microwave. It's not about the individual attributes so much. It's about the holistic view. And that's why we analyze the photos the way we do.
Yeah.
What we're working on is an amenity gap analysis. So it's not toggles like, hey, let's scenario test and see like if I did X, Y, and Z. It's saying if you want to take rents up $150 to $200 per unit, these are the amenities that you're most likely going to have to offer based on other properties that have those rent premiums already. Right. So it's a probabilistic approach. We don't know that you'll get those rents necessarily, but here are 10 properties that are getting those rents, and here are the attributes of those properties. If you want to fall within that comp set, you're going to have to renovate to that level of finish and have these amenities present in your property.
Yeah. Well, and that could be the differentiator for if you've got the stainless steel microwave that you're going to acquire that new lease as well in comparison to another property. So you might not achieve a higher rent, but you will achieve more leases and maybe stay occupied longer.
Yeah, that's another thing that we didn't really tackle too well on Enodo was like table stakes amenities versus really you're going to get a premium for those amenities. Like there were certain markets where it was pretty clear that the pool, you would think a pool is a nice amenity, but like in Texas, everyone's got a pool, right? You kind of have to have a pool. So we found the premiums were pretty low for a pool, but we didn't quantify the negative side if you don't have that amenity, right? And I think that's something that we can do with our approach today.
Yeah, that's huge, man. Awesome. I've been following you for a while, man. I definitely am going to obviously continue because it would be smart of me too. If somebody wants to get a hold of you, check out HelloData. Can you tell them what direction to go in?
Yeah. So go to hellodata.ai, and if you schedule a demo, we're a team of 3, right? So it's gonna be with this guy. you're gonna get the demo with me. We're a small but profitable team at this point. We haven't raised. We don't intend to raise. We're doing it the old-fashioned way: build stuff that's valuable, sell it, and then use that money to build other stuff that's valuable. Right? Try to.
Well, and with you being on the front line, you get to directly hear the feedback. That's huge for product development, and then maybe just one conversation can change the trajectory of a platform. Just having one little nuance. So I totally get it, and that's smart of you to have those conversations one-on-one. And also when you're demoing, you can also find little workflows that you might want to change too. So I get it, man. Love it, man. We'll definitely stay in touch. Appreciate you coming on today, and we'll talk soon.
Sounds like a plan.
All right. Thanks, Marc.